Good morning, trade pros. Welcome to Morning Market Update for this beautiful Friday, March the 13th. Oh my gosh, it's Friday 13th. I think this Friday the 13th, though, will be a good one for stock markets. We're getting off to a pretty bullish start here with 5% limit up at the moment. That's why markets are not moving. 25.95 is the level at which the market is up 5% off of the prior day close. And so here we are sitting sideways. If you actually look at this thing, we were down about 2.5, almost 3% actually off the open. So we've rallied 8% off the overnight lows to come to where we are and take a little bit of break overnight until the U.S. Open coming up in about 25 minutes. Then the circuit breaker is lifted and we commence trading. All right. So what gives? How come we're up so much so quickly? Well, number one, this sell-off was getting a little bit overdone in one single wave downward. All right, this is the greatest sell-off since 1987, Black Monday. Huge sell-off yesterday. All right, very dark, a lot of sell stops, a lot of panic. Today we're going to have to rebound a little bit. Number one, it's Friday. Number two, this is probably the last day you're going to be trading the March contract in futures. And then next week, we're going to roll forward to June. Next Friday, March officially expires. And so, the selling, if you're long, you probably have already gotten out of portfolios if you panicked. All right. If you were long and wanted to hold your portfolio, you've probably already shorted to hedge out your exposure. All right. If you're short, you're probably shorting on the way down and taking profit, but wondering at some point this thing's going to pull back. And so you're losing the sellers in this market rather quickly. Throw into the mix $1.5 trillion of stimulus, up to $5 trillion of U.S. stimulus announced yesterday. And, that puts it even more interesting. We're in a scenario where there's going to be a bit of a rebound. The question is this a dead cat bounce? All right, yesterday I saw somebody say a dead bat bounce because of coronavirus. Kind of comical, but not really funny. So here's what happened yesterday that a lot of traders don't realize that I think was a big thing that the Fed announced. And even though the market shrugged it off yesterday, like it didn't care, we know that there's a little bit of a lag for the stimulus to kick in. All right, so the Fed just injected a boatload of your taxpayer money into the economy. I say yours because most of you are probably U.S. listeners, and we're in Canada, but we have global audience, obviously. But let's just say taxpayer dollars. It may not be yours. All right. Here's what happened. So they increased their repo facility twice this week already, from 100 to 150 billion to 175 billion dollars per day. All right, so it's not like they just give that money away. It's a loan overnight, but it's going to have to get repaid. So they're injecting liquidity into the economy. Well, what they're doing now is adding a new 1-month term repo facility, which means a 1-month short-term cash loan to banks so they have the required liquidity. The New York Fed announced a total of $1 trillion yesterday in 3-month repos over 2 days. So yesterday, the first one went through at 1:30 p.m. Eastern. There's going to be one today. All right, 500 billion 1-month repo offered. Of that 500 billion, I just saw this morning that they only accepted about 24.1 billion of bids out of 500 billion offered for the 1-month repo operation. So it was undersubscribed today. All right, so it wasn't a trillion because people didn't take advantage of that 500, as much as the Fed would have liked. But the message isn't about how much of the repos were subscribed, how many weren't. What the message is, the Fed's got the markets back, and it's going to put a lot of cash or liquidity into this economy. All right. If you look at the math, if they oversubscribe or subscribe to all the repos complete, that's $5 trillion in cumulative repos if they're fully allotted. All right, that's huge. And that when is that? By the end of this month. This kind of liquidity, the market takes exceptionally well. They say, hey, this is great. Maybe we should start taking some risk again. All right. Also, the Fed launched what we could now call QE5, depending on how you count. If you think the last round wasn't QE4, then you'll call this QE4. But this is for the people following with this. It's QE5. All right. It's a 5th round of stimulus, no matter what you want to name it. The last one was called not QE, but it was still QE. All right. They said they're going to start purchasing coupon treasuries, the Federal Reserve, as part of its POMO. POMO is permanent open market operations at the Federal Reserve. The New York Fed will be out there buying bonds, treasuries on the open market. When they buy a treasury, they provide cash. Their book or balance sheet grows with assets, which are loans. All right. So that's what you need to know. The Fed just stepped in and got the markets back. Also, for next week's meeting on Wednesday, market participants are now expecting a 75% chance of at least one more cut, and 24% chance they're going to cut it twice to zero. All right, so we're pretty much throwing everything in the kitchen sink at this. And you know what's scary about this sell-off is that in 08 and 01, things sold off, but they weren't as dramatic that quickly. In a matter of 2 weeks, it seems, we're down 32% in the S&P. All right, so this one was a lot more violent than others. So the Fed took response. Globally, also, there's a lot of people calling for stimulus. I know Bank of Japan reassured the market, saying, "Don't worry, we're going to be buying a lot of bonds. We got you. We're going to be giving cash into the economy." In addition to that, South Korea is reportedly banning short selling for 6 months. It's kind of a big bazooka that they throw out there. And so governments are responding and are realizing this is serious. Should you buy this dip for the long term? I'm going to say no. All right. I get it. We're up 5%. It's Friday. We might be up another 10% before the close. All right. We're not out of the woods yet. I'm not converting into dip buying opportunity just yet. And for me, being in this game for 20 years, even though I'm a young person, it appears like I'm young. I don't smoke, I don't drink much, and I use face cream. I'll tell you what brand if you pay me enough. All right, so being in this business for a long time, I could tell you this much. These sell-offs that bottom out, all right, if you try to get the very bottom of them, it's called bottom picking. And bottom pickers get smelly fingers. The way you want to see these things is bottom out. You may have to pay a little bit more money later on to get on board, all right, but you're getting on board at a time where, it's transitioning to the upside. Right now, this could be a bit of a dead cat bounce on stimulus. We've already seen markets dump off of new stimulus expectations, like the Fed. Remember, the Fed cut emergency rates 50 basis points on March 3rd. Market rallied initially 80 points, and then now we're down about 15% from that level. So we look at that and we say, look, it's going to take a few days for this thing to settle in. A crap ton of money being injected is going to be a bullish thing. Let's see what happens next week. But today, I do think we continue the upside, run some sell stops, and head into the week on a jolly note. All right, you're probably going to start to see articles like, is this recovery on board again? I'm going to say be patient, wait for it, and your goal is not to get the bottom. Your goal is to get it when the probability flips back to the upside. I don't think we're out of the woods yet, all right? But I think we have kind of hit the peak fear, unless this coronavirus progresses more. Nobody at this point still knows the economic damage out of this and the fallout. The market's responding positively. Stimulus, more so than this is the beginning of a new crazy bull market. So be very, very, very cautious putting in a lot of capital in on the long side at this point. All right. Do think we get a little bit of pop off the open? Let's see what the Bears' response is going to be. House Speaker Nancy Pelosi also says that lawmakers at the White House have come to agreement to coronavirus legislative package. That's a tongue twister for me, and I'm an immigrant. All right. She hopes to make an announcement on Friday. Keep your ears out for that. She notes that the bill includes free coronavirus testing and paid sick leave. All right. So that's that. In today's markets, Japan's still down 6%. Hong Kong's down 1.1%. China down 1.2%. India's up 4%. But after getting clobbered the last couple of days, in Europe at midday, London's up 4.7, Paris up 4.5, Frankfurt 3.8. United States, Dow's up 4.3, S&P's up 5, it's limit up. NASDAQ's up 5 as well, it's also limit up. Let's see, is the Dow limit up? The Dow is limit up, so everything's up 5% and holding gains. And if you guys look, I'll teach you a little trick. If you type in SPY, which is the ETF on the market, you look at it, what it's trading pre-market. Pre-market it's showing it's up 2.73%. So, we could be seeing a little bit more of a rally in addition. Actually, it's lost quite a bit of the gains, down about half of what the limit up situation is. So I think we get a limit up, but I don't think we get a second one. I think we start seeing a little bit more trade flow through here, more contracts going through, more volume. Yesterday was a bit tough to trade for a group. It opened up and there was literally no trade. Things scattering all over. I had a 12-tick stop loss, 3 points. I normally trade with 1.25 point. All right, almost triple the size of stop loss. You'd be getting in, getting out right away. So yesterday was a great day for non-experienced traders to blow out thinking they have to chase this thing, whereas the more seasoned traders just kind of sat back and said, look, it's a little too crazy. We got to pick a location, let this thing settle down. I ended up trading oil. Some people went in equities, and we still had a great day. We're up by almost 62%, I believe. Not bad. Okay. Crude oil is up today, 5.1%. Crude is trading as high as 33.87, now 32.74 down off the open. Gold's down 0.4%, back into the high 15s, 15.88 at the moment. Bitcoin absolutely gets pumped yesterday, down 22%. Currently trading at 5,600 and some odd, but it got to as low as in the high 3,000s, below 4,000 for the first time in a while. All right, so that's not good. Consumer sentiment top of the hour today, and Baker Hughes rig count. We're closing out the week. Remember, a lot of people who have to sell the June contract or the March contract for futures have probably already sold it. Now let's start to watch if we get a little bit of buying this morning. I'm expecting a rip in the morning and a little bit of a downside attempt early afternoon, followed by another strong rip into the close. It's called the closing ramp, all right? Especially on Friday. It's a really recurring pattern. What else I got to give you? Watch the closing ramp. All right, last day pretty much to trade the March contract. I may even switch to June. I got to compare the volume. Let's do it now. H has 546,000 contract traded. And if you go out on the June contract, you have 357,000. Still trading March today. All right, wrap up the week, and the contract's live trading March for the very last time this time around. All right, let's send it over to our oil desk. Love you guys, YouTube. Have a great rest of your day. Hope you enjoy this morning market update. Have a good weekend. Be safe. Sneeze into your sleeve. All right, don't touch your face. Watched a press conference from a lady saying the most vigilant thing to do is to not touch your nose, not touch your face, sanitize, and you'll be okay. And she goes to turn the page and licks her fingers. Don't. Anywho, be careful out there. Be safe. It's the weekend. Don't carry too much size heading into the weekend because we know the overnight gaps have been enormous from Friday to Sunday's reopen on Globex. Careful out there. Take care. I love you. And goodbye.